Hello, this is Mike with NetPicks. This is the options recap for Friday, October 25th. So in this video, we're going to take a look at our market overview charts. I like to look at these charts just to get a really broad view of where the markets come from and try to get a preview of where we're headed as we go into next week. And we'll also jump over and take a look at our active swing trader system, and we'll show a couple of trades that have been closed out here just recently. So to start out, I like to look at these overview charts really to get a preview of next week. So really, when I look at these charts, all these charts they're just daily charts of the 3 US index ETFs. So I've got the Dow represented by DIA, SPY is tracking the S&P 500, and QQQ is tracking the Nasdaq. So when you look at these charts, you'll also see a series of moving averages, and the 3 solid lines here, these are all simple moving averages. So I've got the 20 period moving average, which is this green line. I've got the 50 period moving average, which is the yellow line, and I've got the 200 period moving average, which is the red line. This dashed blue line, this is actually an 89 exponential moving average. So these are levels that I like to look at for support and resistance. So when you look at these charts, the S&P and the Nasdaq have really led the charge higher here. And if we zoom in on these charts, let's start out with the S&P. You'll notice here that we've gotten pretty extended here. Okay, now this move higher, it really hasn't surprised me as far as direction goes. What has surprised me has been the magnitude of the move. Okay, this has been a straight move higher. Any downtick here has been bought pretty quickly by the bulls. So it's pretty unusual to see these types of moves and straight in one direction without any type of a pause or any type of a pullback. In fact, when you go back in time here, notice we will get extended, but those periods of time don't tend to last very long. These moving averages tend to act like magnets really, really well. So going into next week, could we continue to move higher here? We absolutely could. What I'd rather see happen, I'd rather see us start to roll over, start to pull back, and get back to the level where we can touch that 20 period moving average. That way we can see a bounce off that level. It's very much like jumping on a trampoline. We jumped off it back here, saw the move higher, now it's time to pull back. If we can get back to that 20 period moving average, we can look to initiate new long trades again. We can look to jump off of that level. Getting long here at these levels, up above the 175 level, all we're doing here is we're chasing at this point. Can the market continue to make all-time highs on a daily basis? Well, I'm sure it could, but the odds are not in your favor if you're initiating new trades on the long side up here at these levels. Odds favor a short-term pause or a short-term pullback. So that's what I'm looking for early next week. Now, why do I feel that that's what we're going to see instead of just a continuation on the move higher? Well, look at the volume figures down here. If we go back to early October, we saw a nice spike up in volume, and that was the start of this move higher. But look what's happened over the past week or so. Look at the volume figures down here. We've really started to trail off as far as volume goes. So it just goes to show that the bulls, they're just getting tired. They're starting to run out of ammo here on the upside. So that's why I'm looking for price action to roll over here as we head into early next week, get a nice healthy pullback. That way we can start to consider the long side again. Now everything I just said on the S&P, it holds true for the Nasdaq as well. Okay, everything orderly on the upside here, everything pointing higher. Now some of you might be looking at this and saying, well, why would you fight the trend here? Okay, we've been in a very strong uptrend on the Nasdaq, really going back to the summer months. Well, the reason really just boils down to the fact that I feel that we're overextended, and I feel like the market wants to pull back and at least touch this 20 period moving average. Now, I've said it before, and I'll continue saying it. The market doesn't really care what I expect to happen. But when you start to take a look at the volume figures, you start to take a look at the open space here between price action and the moving averages, odds just favor a pause. And that's what I'll be looking for next week on the Nasdaq. I would love to see us come back and touch this 80 level. That would be an ideal scenario, but we'll have to see if that plays out. Probably need some help from Apple after their earnings release here on Monday next week. Finally, let's go over to the Dow. The Dow has been lagging for most of this year, and that's really been no different on this move higher. It's been a nice move on the Dow. Okay, we bounced nicely off of this 200 period moving average, almost to the tick. So it's participated in this move higher, but we're not near all-time highs like we are on the S&P and the Nasdaq. So it's got some ground to make up here. What I would love to see happen on the Dow, I'd love to see price action roll back over, come back down to this little cluster of moving averages right near that 152 level, and then move higher. If we want to make all-time highs by the end of the year, I have no problem with that. But first, we really need to see price action pull back in so we can jump off of these levels just like a trampoline. So all that to say, I'm expecting some weakness here next week. And let's see if the bulls are finally ready to throw in the towel a bit and lock in some of the gains from the last couple of weeks. All right, let's take a look at a couple of trades that were just closed recently on some individual equities. Let's go ahead and start out with Apple here. Now, over the past couple of videos, I've showed you the PTU reversal setup. And it's a great setup that looks at market extremes. We use the percent R indicator to look for very overbought or very oversold readings. Okay, that's just one of the setups that we look at. A second setup, this is what we call our active swing trader basic setup. So we're looking at a different series of events here. I'm looking at a different set of indicators. We've got our sentiment indicator down here at the bottom. We've got our signal line here at the top. The setups print very much the same way as the reversal trade. So we've got a roadmap that we can follow. When all of our entry criteria is met, we have our entry point, which is the plus sign. We've got our targets up here above, and we've got our stops down here below. Okay, so we know exactly what we're going to do before we ever get into a setup. Right now, the big difference between our system and many other systems out there, a lot of people look at time-based charts. Okay, we've talked about this in the past couple of videos. I'm not looking at an hourly chart here. I'm not looking at a daily chart. This has nothing to do with time. Okay, I'm looking at a range chart, and on Apple, I'm looking at a range of 6.17. What that means is that each bar here is going to be formed when Apple moves $6.17 from high to low. What that does for me is it filters out a lot of the choppy price action. If we take a look at the month of October, the first half of the month was very, very slow on Apple. Okay, but Apple doesn't like to stay slow for very long. So when we got into the middle of October, price action finally broke out and we were able to capture this move to the upside. So let's break this trade down a little bit. So my setup came back here, it printed on the 4th, and it triggered in on the 7th. Okay, and the system told us to get long. I can pull over the data window so you can see it here, right at 490.94. So this trade triggered long. Price action pulled back. We took some heat on it initially. Pretty slow and choppy in here. But we never stopped out of the trade. Our stop was down here at the red dots. That was down at 472.43. And before we hit that stop, price action finally broke out to the upside. We did hit our full target, which was up at 510. So we were able to survive this slow, choppy price action. The trade took longer than expected. This took about 3 times as long as an average trade typically takes on Apple. But that's fine. We still hit full target. We're still able to book a really nice profit. Now, when we say, okay, our entry point's at 490.94, if you look to go in and buy 100 shares of Apple, is that realistic for a small retail trader? No, it's close to a $500 stock. That's going to tie up a lot of capital. So what I like to do on these trades is I like to trade the call and the put options. So what I did on this long setup is I went in and I bought the November 480 calls for $25.30. Each one of those contracts gives me control of 100 shares of Apple at $480 a share until the end of November. Now, because each contract controls 100 shares of stock, my total cost here is just over $2,500. Now, I know that seems like a lot of money to a small retail trader, but keep in mind, for $2,500, we're controlling 100 shares of a $500 stock. That's really great leverage. Now, I'm looking at a full-size contract here. You can trade mini contracts on Apple, and a mini contract will give you control of 10 shares of stock. So you're able to get in for a tenth of the cost. So for as little as a couple $100, now all of a sudden you're controlling 10 shares of Apple to the upside. So as long as this trade moves higher and I own the calls, that call is actually going to increase in value. So once I hit target over here up at 510, I sold out of the trade for $37.80. That gave me over $1,200 of profit, $1,250 to be exact, or a 50% return. Okay, 50% return in a couple of weeks. I'm thrilled with that. Okay, now I do see higher returns over time. The reason this is a little bit lower than I typically see is because the trade took longer than expected. Okay, and the options lost some value because of the length of time that I was in the trade. But still, a $1,250 profit in a few weeks' time, not too shabby at all. If you were to buy the mini contracts, sure, you're still hitting full target here. You're just controlling 10 shares instead of 100 shares. So you're still booking a nice 50% return on your capital. Now, we do have another long setup over here. This long trade I actually had some students take. I did not take it personal because we have earnings out on Monday. I do not like to hold my trades through earnings releases, so I decided to play it safe and just stay on the sidelines. My students that took it actually worked out well. We hit first target, which means the stop moves from our full level down here up to break even. Okay, then the calculator does that automatically, so really nice feature. And what I encourage my students to do here on this setup, the ones that took it, is you want to make sure you're out of this trade before earnings Monday afternoon. So if you want to carry the trade through the weekend, you could. What I encourage people to do here today is to exit the trade with a profit. Okay, book a partial profit, stay on the sidelines. When a stock releases earnings, a stock can move 10% in the blink of an eye. It can move 10% overnight. Well, I'm not willing to throw my bet down on the table and hope for a 50-50 shot due to earnings. I'd rather just book my profit here, stay on the sidelines. We'll try to take the next trade that comes next week. We'll look at new setups on Tuesday or Wednesday and go about it that way. So I'm not personally in this trade, and I'll look to take the next setup here in middle to end of next week. Okay, the next setup I want to look at here is TLT. This is an exchange traded fund that tracks the bond market. Okay, so it's a really great way to diversify your portfolio. Look at a basket of products like an ETF. Look at a whole different market like the bond market. It's a great product to trade. It has some great performance here so far in 2013. So I'm going to take a look at this long setup. This came, again, we triggered long on the 11th of October. Okay, the system gave us our entry point, gave us our targets, gave us our stop. So we knew exactly where to get in and where to get out. Instead of going in and buying the shares of TLT, I went ahead and I bought the November 104 calls. Okay, so I bought those 104 calls. Those calls, each one of them, gave me control of 100 shares of TLT at $104 a share. And I paid $243 per contract. Okay, so a couple $100, really great leverage, gives me control of TLT on the upside. So in this case, did we take some heat initially? Sure. I mean, it pulled back. We almost hit our stop out. Fortunately for us, we were able to stay in long enough to catch this breakout, and we ended up hitting full target up here at 107.65. And when we exited out of our calls, those also increased in value. We sold it out for right around $400, booked $155 of profit, or a 64% return. Now, $155 of profit doesn't really sound like much. Okay, we were in this trade for about 11 days. But keep in mind, you only paid $240 to begin with. Okay, nothing says you can't come in and trade 10 contracts here if you have the capital to do so. Okay, so when trading options, it's really important to look at the percentage return. A 64% return in 11 days, well, that's phenomenal. Okay, all you need is a couple of trades like that a month, and you're sitting really nice. Okay, so that's the active swing trader basic setup. Okay, it really works great in combination with the reversal setup, which we've talked about over the past couple of weeks. And I'll be back next week to take a look at the most recent trades on the reversal setup. But the systems just continue to do a really nice job giving us high probability setups. Heading into next week, if we start to see the market pull back, like I talked about a few minutes ago, the systems will give us a new round of short setups. They'll tell us exactly where to get in and where to get out. So it's a great time to be involved in the market. This is typically the time of year when we see nice volatility, and I'm expecting just that here as we head into November. So I'm going to wrap this video up here. I'll be back with you guys next week.